the success of this product is going to be its own downfall.
We're seeing the two hemispheres of the industry, crypto and Bitcoin, come together.
Do you think it's realistic for Bitcoin to cost $36 million in 2076?
Yes.
Last week, Michael Saylor shocked the world by announcing that Strategy will likely sell Bitcoin. This week, they bought another 535 coins. And with STRC's ex-dividend date this Friday, we could be in for another massive week. Today, I'm going to show you why the selling controversy was never what it looked like, and why when you line up every move Saylor has made this year, it all points at one target that changes the game for Bitcoin forever. And while everyone is arguing about selling, something else is happening quietly underneath. A system is being built on top of Saylor's products that merges Bitcoin and crypto. And he's not just allowing it, he's welcoming it. And it could set up the next leverage unwind disaster. This is Truth Block. I'm Hurley. Let's mine truth. Hey guys, before we dive in, I just want to let you know that we're building something really exciting at Simply Bitcoin that you won't want to miss. Scan the QR code below to learn more and be one of the first to see what's coming. All right, let's start by closing the loop on the Saylor and Strategy selling controversy from last week. Strategy has still yet to sell any Bitcoin. Instead, they announced another buy this morning, 535 more Bitcoin, which brings the company's total holdings to 818,869 BTC. Saylor sat down with Ledn at Consensus 2026 and put everything to rest in one line.
I'm very famous for saying never sell your Bitcoin, and that's why the internet went crazy when we said we might sell it. But if I was being more precise, I'd say never be a net seller of Bitcoin. It just wouldn't have been so viral or so catchy to say never be a net seller of Bitcoin. I think that in these periods, even if we were to sell one Bitcoin, we'd be buying 10 to 20 more Bitcoin. So you're really talking about a situation where we buy 10 Bitcoin, sell one Bitcoin, buy 9 net Bitcoin, and continue to accrete Bitcoin. It should be a non-issue after people understand it. But right now, it's a colorful area of commentary.
So he switched from never sell Bitcoin to never be a net seller. That's the policy. And the reason he said it at all has nothing to do with conviction fading. It has everything to do with the S&P 500. When S&P Global gave Strategy a B- credit rating last year, it came with a checklist of 3 things they want to see for an upgrade in the future. 1, better dollar liquidity. 2, less reliance on convertible debt. And 3, proof that Strategy can access capital markets when Bitcoin is under pressure. And buried in that document, S&P calls Strategy's reluctance to sell Bitcoin a weakness. So Saylor signals he's willing to sell. That's the 3rd box. STRC replaces convertible debt. That's the 2nd box. Tax loss harvesting generates dollar liquidity. That's the 1st box. So the payoff of everything Saylor has been working towards the last year is a credit upgrade, which opens $4.9 trillion of addressable credit market. Investment grade would open $23.6 trillion. So the real endgame here is the S&P 500. The sell signal, the credit pursuit, STRC generating revenue, all of it is engineering a company that looks like a legitimate company to the index committee. Because S&P 500 inclusion means passive index fund flows. Every single move this man makes has one purpose: stack more Bitcoin at all costs. And he isn't stopping there. At Consensus 2026, speaking to the Wolf of Wall Street's Scott Melker, he described what's being built on top of STRC.
I'll be speaking about how we created digital credit, which has exploded. It's gone 0 to $8.5 billion in 8 months and is growing 350% a year. So I'll speak about that phenomenon. I'll talk about why that is spreading through the TradFi ecosystem. And then I'm going to talk a bit about digital money and digital yield, how you can take stablecoins and DeFi protocols and loop that credit 3x, 5x. So you either get a stablecoin or a yield coin that pays 8%, or maybe you create a 25% 3x levered or looped digital yield token or digital yield fund. And so I think what's fun right now is digital credit is bringing the capital gains and the power of Bitcoin to the crypto and the digital assets ecosystem in the form of yield coins and DeFi. And we're seeing the two hemispheres of the industry, crypto and Bitcoin, come together. So instead of having capital and crypto that never finds Bitcoin and capital and Bitcoin that never goes into DeFi or crypto industry, now the capital flows in, it flows to yield coins, it flows to digital credit, it flows to Bitcoin, it loops back, and it invigorates the entire industry.
This one feels like a bit of a head scratcher from a Bitcoin purist perspective. This is the man who spent 5 years clearly differentiating Bitcoin and crypto, saying there is no second best. And now he's openly celebrating the convergence of Bitcoin and crypto. I think Saylor sees it as plain as day. Crypto is dying. The speculation frenzy that used to live in altcoins and dog tokens, that capital is migrating. It's moving to leverage plays on stablecoins and Bitcoin through vehicles like STRC and MSTR. And Saylor is building the on-ramp and waving in the circus. He'll capture the frenzy and convert every dollar of it into Bitcoin. He doesn't care if the gamblers get burned, and why should he? It's not his problem. He cares that the Bitcoin ends up on his balance sheet. It's shameless, but it's also kind of genius. But the danger here is the likely scenario where the over-levered gamblers get burned, which brings us back to Coffeezilla. 2 days ago, Coffeezilla debated Jeff Walton, Chief Risk Officer at Strive. They talked for over an hour about whether these products are sustainable. Now, this debate came on the heels of Coffeezilla making a couple videos exposing STRC to what he sees as a dangerous yield scam on par with Terra Luna. We covered those claims in an episode a few weeks ago that you can check out here. So the debate was essentially a professional YouTuber versus a digital finance expert. So you can guess how it went. But here's one moment worth paying attention to.
Let me say this, Jeff. I will agree that I look at this product and I think about, how people think about yield. I think that it's going to catch on enormously. I think that worries me deeply. I don't think it, and I actually think that the success of this product is going to be its own downfall. I think the increase in future liabilities for you guys will become a massive problem. And the bigger it grows, like the bigger problem it is, because the more you're going to rely on Bitcoin going up by some amount in order to pay the obligations. So actually, I think your biggest risk will be the success of this product. And I also think anyway, so it is what it is.
It's interesting, right? I mean, the downside risk of your position is an interesting perspective, but yeah, okay.
No, for you guys, for you guys specifically, I think that's like one of your core risks is this thing continues to grow and is super successul. I think that'll be a challenge.
Position. You're like, man, you're gonna have a hard time because your product's gonna be so successful. Well, it's not a product.
It's an obligation. It's an obligation.
Yeah,
it's a liability. You're selling too many liabilities. That's not a weird position to have.
So he says the success of this product is going to be its own downfall. Now, I don't think Coffeezilla is talking about the DeFi leverage layer on top of STRC. He's talking about STRC and SATA themselves. He thinks the underlying products are unsustainable. And the reason he thinks that is that he doesn't believe Bitcoin will keep going up. He thinks 13% growth is unrealistic. He thinks 30% is insane. And that's where his whole analysis falls apart. Watch what happens when Walton asks him to follow the math.
13% a year. For 50 years, how much will Bitcoin cost? Assuming it goes up at 13% a year, right? Which is y'all's cost of capital. In 50 years, that Bitcoin will cost $36 million. Do I think every Bitcoin will cost $36 million in the year of our Lord 2076? No, I do not. I think that is crazy. I think that's unrealistic.
In 50 years?
Yeah.
What was the price? What else is 50 years old that we could try to compare here? The largest company in the equity market 50 years ago had to have been not even $100 billion, probably $50 billion. I don't even know. 50 years ago.
But you asked me to show you the math. Do you think it's realistic for Bitcoin to cost $36 million in 2076?
Yes. Yes. Yes, undeniably. Yes, absolutely.
Okay.
Yeah, because the U.S. debt to GDP is growing at a 3.5% compound annual growth rate. So right now it's at 120%. It's growing every single year. At what point does
the U.S. debt growing at 3.5% makes it logical that Bitcoin would grow at 13%?
No, I think that the probability of fiat demise is high.
So Coffeezilla ran the compound interest calculator himself, and when 36 million per Bitcoin came out, he calls it crazy and unrealistic. And I get it. $36 million per Bitcoin in today's dollars sounds insane. But Bitcoin's 200-week moving average compound annual growth rate, which smooths out the volatility and gives you the structural trend, has never gone below 22.6% in any year on record. The mean is 76%. The median is 55%. The worst year on record was 22.6%. And Coffeezilla can't believe 13%. Here's the disconnect. He doesn't understand the total addressable market of this asset. $900 trillion of global assets. Bitcoin is $1.7 trillion now. A fixed supply monetary asset in a world of permanent debasement doesn't just go up. It goes up a lot. It has to. And because Coffeezilla can't see that, he can't locate where the danger actually lives. Then comes the moment that breaks his whole framework.
I look at Bitcoin. I look at strategic reserve, Bitcoin reserve. I look at BlackRock holding Bitcoin. I look at Michael Saylor holding 4% of Bitcoin or something like that. I look at all these different players, the institutional players, and I go, most of the big events that are going to have massive, kind of like Bitcoin will have addressed the markets it's going to address. A lot of those have already occurred. And so I see Bitcoin more like, hey, it's got the people who have wanted it, it's going to address. Largely it has addressed. Eventually it will come to a point of, I think you'll start to see like an equilibrium. And I think if you take the case of Bitcoin being an inflation hedge, if you agree with that, you would agree that once it's a mature asset, it's going to go up at the price of inflation. Not every year, whatever, not as a regular thing, but eventually you would say that, which is not 13%, which is not 11.5%, which is definitely not 30%. Yes?
Look, the money supply is going up at 6.7% compounded annually.
Oh.
6.7%. The money supply is going up at 6.7% compounded annually. The U.S. debt to GDP, the health of the U.S. government and the business of the U.S. government is compounding at 3.4% annually. It's at 120% right now.
Okay, is that less than 13%? Is that less than 13%?
Look.
Yes, it is.
Like, why do you hold dollars?
Why do you hold dollars? Listen,
are dollars risky? Let me ask you that, Coffee. Are dollars risky?
In what sense?
I don't know. Are they risky?
I mean, you need to give me like, are you asking if there's
risky?
Inflation?
Yeah, is holding dollars risky?
I think it's a liquid asset. It's a very liquid, very...
return-free risk?
Are dollars risky? And he can't answer the question. He calls the dollar a liquid asset. Walton calls it return-free risk, and you can cut the silence with a knife. This paints the picture of the whole disconnect. When the DeFi yield coins blow up, and some of them will, because 5x leverage on any asset eventually finds the wall, voices like Coffeezilla will look at the wreckage and say, I told you so. And they'll be wrong. Not because they were wrong about the leverage, but because they can't tell the difference between Bitcoin and the casino. And this isn't just a Coffeezilla problem either. Corey Clipston posted on X calling DeFi looping yield products on STRC the best candidate for the next crypto blowup. Lynn Alden replied that she's been focused on exactly this risk since the strategy earnings call 3 months ago. But the distinction here is important. Clipston and Alden aren't warning you about Bitcoin. They're not warning about STRC. They're warning about the leverage layer on top of it. That's the difference between someone who understands the architecture and someone who doesn't. STRC is not the next Terra Luna. The collateral is real. The yield mechanism is transparent. The capital structure is regulated. But the DeFi products being looped on top of it at 3, 5, and 10x leverage, that's when it starts to rhyme. Not because the collateral is fake, but because leverage doesn't care what it's built on when it unwinds. So here's the full picture. Saylor is stacking with laser-focused relentlessness that borders on obsession. He's basically engineering inevitable S&P 500 inclusion. He's building the most successful credit product in American financial history. And he's welcoming the speculation frenzy migrating out of the dying crypto markets because every dollar of it, no matter how reckless, gets converted into Bitcoin on his company's balance sheet. The model works, but the leverage on top of it will very likely burn people. And Bitcoin doesn't care either way. When the yield coins blow up, Coffeezilla will say he called it. The headlines will read Bitcoin-backed products collapse. And they'll all be wrong again about what actually failed, because they never understood what succeeded. That's the line. Bitcoin is not the derivatives built on top of it. Understand the difference. Get too close to the fire and you will get burned. Don't play fiat games. Stay humble, hold your own keys, and enjoy the ride. So do you think this DeFi leverage stack blows up? Is Saylor playing with fire? Does strategy make the S&P 500 this year? Drop your thoughts in the comments. And if you made it this far, don't forget to like the video and share it with someone who needs to hear it. And of course, subscribe to Simply Bitcoin so you don't miss the next one. We'll see you Thursday.